Good evening, everyone, and welcome. My name's James Harding. I'm the editor and co-founder of Tortoise. And welcome to this ThinkIn with Mark Carney, where we are delighted to get the chance to be talking to Mark about his new book, Values. Set itself a small business in the subtitle of Building a Better World for All. Let's see if we can set out the blueprint, Mark, to get that done by the end of the hour. Just to welcome you, Mark, and to people who may be new to Thinkins, when we set up Tortoise, the idea was that we were so overwhelmed by the breaking news, it was hard to understand what was driving it. And if we were going to have a slower newsroom, we wanted it to be more open. And so in the way in which I'm sure you've done some news boards, some editorial boards, this is essentially a meeting of our newsroom where all our members are members of our newsroom. So I'm going to put some questions, have some thoughts, and hopefully a discussion with you. But I hope that you'll see my colleague and fellow editor, Liz Mosley, is here trying to marshal the chat. And so if you've got thoughts, observations, points, please do raise them in the chat, and I'll try and bring as many people in as possible. As you'll see, there are quite a few joining us this evening, but as far as possible, bring other voices and other views in. Mark, I wondered whether we could start. There's a story that you tell at the beginning of the book, and in some ways it's the animating mission of the book about turning grappa into wine, a mission that was set for you by none other than the Pope. So do you want to just tell us what that was? And I suppose it gives a frame really for thinking about the idea that drives through the whole exercise.
Okay. Well, first off, James and Liz, let me thank you for having me and everyone for joining. I realized after I wrote a book, one of the questions they asked me, well, who'd you write the book for? And literally the book is written for Tortoise members and for an event like this, which is really to engage in a discussion about how we can all build a better world for all. But and so my comments are to try to frame it and give from my perspective, obviously. And you're right, it was 7 years ago. And it was a Saturday in the summer. I remember exactly when it was. I suppose you do remember when you meet someone like the Pope, but it was a Saturday before the World Cup final between Argentina and Germany. And of course, you had two popes still do, I guess, one on either side. And so Francis, and it was a conference which was about the future of the economy, and it had a very wide range of people there, from Muhammad Yunus, the founder of microcredit, to the chair of Goldman Sachs, to Argentine labor leaders, to people of a wide range of faiths and background, and economists. Krugman was there, or Jeff Sachs rather was there, and I was there. And Francis comes to lunch, surprises us, and he tells his parable, which is to say that it's the Vatican, it's Italy, it's Saturday in the summer, so we're going to have wine with lunch. And wine is many things. It has a bouquet, it has a color, it has alcohol, it has a taste. It enlivens all of our senses. At the end of the meal, we will have grappa. Grappa is one thing. It's alcohol. Helps with digestion, in effect. And then he goes on and says, people are many things. They're self-interested, they're rational, they're curious, they're passionate, altruistic. The market is one thing. The market is self-interested. And your job, and he points to the 60-odd people in the room, is to turn the grappa back into wine, to turn the market back into humanity. And he finishes and says, this isn't theology. This is reality. This is the truth. Puts the microphone down and sort of leaves us with that charge. And I'm like, well, can we go back to talking about the World Cup final, because it's sort of slightly more comfortable ground. Anyways, that was the charge. We didn't resolve it at that lunch, and it stayed with me through the course of the next several years, and living through a few more crises of whether it was the euro, or not a crisis, but issues around Brexit, Scotland, and ultimately COVID and climate. And I took the opportunity. My intention this time last year was to take the opportunity of, the enforced break after leaving the Bank of England, was to try to get my thoughts together around it, and that this was the product of it. I had more time on my hands than I had expected because of the lockdown, but this is my attempt to try to turn grappa back into wine. And I've, not to give away the ending of the book, but I do claim by the end of the book that this is how you turn grappa back into wine. So others will judge.
And can you take us through it, Mark? Because the argument is strikingly simple, but then you see it everywhere. This idea of how value has been divorced from our values. And do you want to explain for us why you think that's happened?
Yeah. So what I try to say, and the reason why there's parentheses around the S, is to try to get across that the relationship goes in both directions. So there's this long period of, and it's slightly arbitrary to pick the Thatcher-Reagan revolution as the start of it, and much good in that, just to be clear. I'm not saying it's all bad, but it starts a swing of the pendulum towards more and more use of markets, reliance on markets, not just in financial markets, where we, in the process before the crash, built markets on markets, which is how you end up with things like CDO squared, derivatives on top of derivatives, if that makes sense. And it, by the way, it didn't make sense, which is why part of the reason why it crashed. But also you have more and more social interaction and services that are brought into the market. So think of internal markets for the NHS, or paying for charity, and perceptions that fines become fees. I mean, there's an element, and this is an argument that Michael Sandel has made much better than me, of this sort of pendulum towards from a market economy towards a market society. That process does a couple of things, in my judgment, and I argue in the book, is that it undercuts the social capital of the market, certain behaviors and norms and ethics that are necessary for the market to function well. And you can go back to Hayek, or before him to Adam Smith, who really emphasized the importance of these. And my judgment, for example, Friedman's error is he just assumes that those are immutable, and that you can have shareholder primacy without recognizing that you will ultimately undercut the structure of the market. That's one deficiency. The second deficiency is, I'm going to list three, is that we, by bringing sort of sacred aspects, if you will, into the market, so paying for charity, and that is an oxymoron, but if you pay for charity, you view that volunteerism as a scarce commodity. And now I'm really talking and thinking like an economist, including some Nobel Prize economists. And so it's something to be rationed, as opposed to a virtue that grows with exercise. And I think, virtually everyone on this, I think, is in the UK, and I was there for a good portion of it. We saw how contagious volunteerism has been during the lockdown, to the credit of the people of the United Kingdom, whether it's 1 million people for the NHS, or just, not just, but, helping out neighbors and others. So there's that corrosion, in, if you will, of sacred values by bringing things into the market. The third thing that it does is it forces a number of decisions into the realm of the economic, where we move into a sort of a utilitarian trade-off. So the future for today, planet for profit, as two examples, health for the economy, for example, during COVID, as opposed to having some hierarchy of values that we want to achieve. And I'll make the reverse causality, if you're still with me, shorter in my explanation. But what the book also argues and gives examples, that in those cases where there are priorities, and say priorities around climate, which is something that has emerged, and you have a social value, sustainability, intergenerational fairness in this case, that is the clear objective, then the market value in the market can be in service of that value, those values, and you see the power of it. But you need to be conscious of these things, and not just allow the drift to happen. Or we need to be conscious, is the better way to put it.
Well, I'm interested, Mark, when I was reading the book, to give one example of the effects you describe of how giving a market value to a human value can be corrosive. There's a lovely little example of how I think it's an Israeli nursery school decided that what they were going to do was they were going to charge parents if they picked their kids up late, right? Because this was just unfair on the teachers having to stick around because the parents showed up late. And instead of the parents showing up more on time. In fact, they said, well, okay, well, I'll just pay the fine and show up later. So in fact, the respect for the teachers, the thing that they were seeking to prize, was destroyed. And when I read that little anecdote, I found myself wondering whether in your writing of the book, in the whole exercise, you found yourself thinking, look, there are some things here which, whether they're love or kindness or life itself or respect or solidarity, that we just can't put a price on. And as a result of that, they are going to be marginalized by the force of the market. That although you're trying to like square the circle, in the end, it can't be.
Yeah, yes is the short answer. You can't. I mean, there's some things that literally money can't buy or shouldn't try to be priced, and there's also limits to certain techniques that are used. There's some value to these. I'm not dismissing them entirely, and I go into detail on this, but sort of techniques of what's called monetization. So how do I ascribe a value to something that's not in the market? So and the most extreme version of that is the value of life, and the various ways to estimate the value of someone's life, using and there's a few methods. I mean, one example is taking a slightly risky job, physical risky job. Implicitly, we are all making a calculation of our relative probability of death, even though most people, I mean, candidly, aren't that good at fractions. We're able to estimate infinitesimal small differences in probability of death, and then that's grossed up to a value of life. The other way is to survey people and ask them, well, how much do you think, in effect, life is worth? And what's interesting is that, I mean, I have, some may know, I have 3 passports. I discovered through this process that I'm most valuable as a Canadian, which is why I'm back in Canada, because Canada, when they do that calculation, it works out to about 1.6 million on average, and it's less for the UK and less for Europeans. Although if I can get across the border, my life will be worth more, apparently, although my probability of death will be higher, I suppose. So maybe the trade doesn't exactly work.
So the valuation of a Mark Carney in the United States is slightly higher.
In the United States is higher. Yeah, United States is higher. In the UK, we're worth, you're all worth 1.632 million pounds. In Europe, it ranges between 1 and 5, but averages a bit higher. In Canada, it's a bit higher than that. And then the US is higher, and it's also increasing at a sort of exponential rate. Anyways, the point being that there are certain things that are difficult to value, and then, but actually, I should finish the thought about life. And these valuations are used for things like whether to have airbags in cars, or whether to build a road, or regulations that involve some risk to life, either reducing the risk to life or increasing it. And there, look, I'm not totally dismissive of it. There's value to them on the margin. What's interesting, though, is that in COVID, the valuation, the revealed preference of people for life is multiples of that, absolute multiples of that. If you measure in terms of what people were willing to do, not because they were instructed to do, but if you track people's behavior in terms of self-isolation and reduced activity, it suggests much higher valuation, not just on their life, but on other people's lives. So it shows you some of the limits of this approach of bringing things from outside the market into into valuation and trying to judge them and behave accordingly. What in the end I'm trying to do in the book, though, when I go through the various values that I think the 7 values that should be accentuated, is slightly more restrictive, because it's more about, as if this isn't enough, but it's more about economic prosperity and a sort of inclusive growth, and a better world for all in those broader economic terms, not purely in terms of obviously income, but in terms of welfare and happiness. It doesn't go to the to elements of the sublime, I guess, if I would put it that. It was long enough already.
Can I come? I want to come back to that, because I want to come back to these questions about happiness and cohesion and the nature of our society. But I want to talk for a moment just about the central chapter. I'm going to bring some people in a moment, but the central chapter, if you like, is really the climate chapter, to me at least. It's the one where you go from what you call the tragedy of the horizon, the problem that is coming at us, and then having been in some ways, Mark, quite critical of technocratic or mechanistic decision making in government around COVID, actually when it comes to climate, you stand back and say, actually we can see that we have levers at our disposal within financial markets that can rapidly and materially change the outcome on climate change. And I just wondered, I think the chapter's called Breaking the Tragedy of the Horizon. You talk about carbon pricing, you talk about, TCFD, the Task Force on Climate related financial disclosures. I wonder whether you just talk about that, just for people like us who are thinking, frankly, are we screwed? Is there any way out of this? Is there a possibility that you can see that says, actually, yes, we can answer the problem of climate?
Yeah, so the short answer is yes, there is a possibility to address this, and some of the elements are coming into place. I'll just say one word of context and then answer directly the question, which is that I think the COVID chapter, I'm critical of the preparation. I'm partly also saying that it shows ultimately what's revealed through that chapter through how people behave, but also what governments stumble into doing, which is putting a priority on health and then optimizing given that priority on health. Let's get R naught well below 1, as we all know we're trying to do, and then do what we can within that. And then there's a read across to climate, is if we have a priority on addressing climate change, a priority in terms of getting to net zero, which, as you know, is the objective of the UK and now 130 other countries, and the US about to join that group, and hopefully 1 or 2 other big countries before Glasgow. That's the objective. Then how do we organize ourselves in order to deliver that? And it's not just the objective, it's a legislative objective of government, but just looking through the faces on the grid, many of us, would have children who were marching, or went back when people were allowed to march for this Friday for Futures. And I'm sure a number of you supported, there's a bigger social movement that underpins that. So there's a social consensus, not everybody, but there's a broad social consensus. Okay, let's deal with this. Let's address net zero. Let's not trade off the two. So what do you do with that? And the way I try to frame it in the book is to say that gives us a real head start, if not decisive political technology to aggrandize it a bit. So there's this social consensus. This is what we want to do. On the engineering side, what's possible to do, I'm going to simplify, but if the carbon price or carbon regulation and carbon price is equivalent to somewhere between $75 and $100 a ton, about 2/3 of emissions, a little less, but about 2/3 of emissions can be efficiently, economically reduced. Now, there's a lot in that. We have to build a lot more renewable power. We have to retrofit our homes. We have to, do machine learning on our HVAC systems, et cetera. But about 2/3 have to do that. If I were to simplify Bill Gates's book, it's about the other third, right? These are where we need breakthrough technologies on hydrogen and carbon capture and other areas, which is possible with focus, but won't happen without focus. So, okay, so we're in that world. The issue is we just don't have much time. And so how do you accelerate that adjustment? And that's where a lot of the finance stuff comes in. And TCFD, it's a big acronym, but all it really means is that companies say what their carbon footprint is today and what they're going to do about it tomorrow. And getting that out there consistently across all major companies is incredibly important, because you can't really decide how to who, in whom to invest or to whom to lend without that type of information. Our goal for Glasgow is to make it mandatory. The UK is leading on it. The UK is going to legislate. There's other things in train that basically will accomplish that goal. I'll leave it at that.
Mark, can I read it and I felt 2 things. One was, okay, look, there's a plan, but also a little depressed about timings. So on the TCFD, on the climate disclosures, you talk about a growing number of companies that are disclosing their emissions, but they're a tiny fraction of the companies in the world. Even the UK, where you champion this, is only committing to it in 2025. It all feels very slow to me.
It's well, considering it was a concept 5 years ago, a concept. It was the rules or the standards were only announced 2.5 years ago. And really for large companies in the UK, it's 2 years from now, it's 5 years from now or 4 years from now for all companies in the UK. It's a pretty fast rollout. Look, there's it's numbered in the hundreds that get you to 3/4 of corporate emissions if you look all the way through the supply chain. So if you have that, then you go a long way to aligning incentives. What if I can just finish though on the architecture? That's you've got to have this information. We will have this information. Then you need clarity about all of our savings ultimately are in a bank, a building society, a pension, a TESA or some sort of savings product. We should know whether or not those are aligned with net zero or are aligning themselves with net zero. And that's what's playing out right now as we speak, which is to get the big banks, the big pension funds, the big insurance companies to have net zero plans and then be able to make it clear to all of us and by extension everyone, whether or not it's aligned to net zero, so we can vote with our money and they can back companies that are moving onto the right side of climate history and to make these big investments. Another thing we need, I won't go into detail unless people are interested, is there's a few big markets that need to be created, including in carbon offsets, nature-based solutions that need to be there. It's possible, James, to get to the punchline. It is possible. It is reinforced by public pressure. And the financial sector has now realized that it's not a passenger in this, but it's a main actor in these adjustments. Possible, but not assured.
And Mark, just one other thing, you also make the case for $100 carbon price. At the moment, people are, we're operating to whatever is an £18 carbon price in the UK. It's sort of meaningless. Even big companies these days are only calculating carbon prices somewhere between $40 and $60. You seem to be saying, no, it has to be at that level of $100 to really change behavior. What's the likelihood of that happening?
Well, it's better than we might think. And one of the issues that's an argument made in the book, and now shamelessly name drop, that was an argument that Janet Yellen and I made a few months ago, is that what you really need is a pathway, a credible pathway to these higher carbon prices. By the way, dropping the Pope in there wasn't shamelessly name dropping, but Janet Yellen. See, I'm still a central banker. There's the Pope, and then there's the other central banker.
I like the fact that, by the way, in the mind of a central banker, that the Pope is not a name drop, but the US Treasury Secretary is. That tells you a lot.
He signs the money. I mean, come on. But that if you have a credible pathway for carbon prices, so in Canada here, within the last few months, they've legislated or are legislating a carbon price of $170 by the end of the decade. So it's 30 today, it's going to 170. But once that's in legislation, you basically know it's going to happen. And as industry, you start pulling forward the adjustment. And this is the key thing and this is the G20 conversation now, which is, okay, you've got to do all these plumbing things in financial markets. You absolutely have to do things like ban internal combustion engines by 2030, which is the UK. I mean, pick your date, but pick a date certain where regulation really bites. It can be in the future, but people will start adjusting now. I mean, if any, maybe there are people on the call who, run or in the auto sector or related to it. That's one model cycle before you get to 2030. So you're adjusting as of now. And if you're in the rest of the world or the rest of the advanced world, so-called advanced world, you're saying, well, if the UK is doing 2030, Europe's doing 2030, maybe the US is 2035. At worst, it's 2040, but it's no farther than that. And it's that kind of credibility that we need in terms of clear policy that then pulls forward adjustment today, particularly if the financial sector is judged on whether or not they're helping to put companies on that path.
Well, Mark, can I pick up on the point about credibility? There are a few people who've as you're talking, are raising sort of different sets of points. One is about political credibility. The other is about our reliance on technology and innovation. And a third is our assumption that we can keep on consuming this much. And if I can, I'm just going to bring in a few different people to sort of address those things. I think Isabel Hilton was asking about, the political element of this. Finley Asher is talking about our reliance on tech. And I see Joe Mortensen about the fundamental question about, whether or not we just need to change our consumer behavior here. And so, Mark, if it's all right, I'm going to ask each of those in turn, just to sort of make their point, give you a chance to listen in, and then come back to them. So, Isabel, do you want to go first if you're there?
Yeah, great. Thanks, James, and thank you, Mark. You've talked very eloquently for many years about the tragedy of the horizons in finance and investment, but it's always seemed to me there's also a political tragedy of the horizons, in that, the mid-century promise is easy. Few of these politicians will be there. Holding them to account for what happens before 2030, which, as we all know, is absolutely, if you're not on track before 2030, you're probably not on track. I'm very conscious of it with our own government, but, elements of the 14th five-year plan are also, reminiscent of that. It's not exclusive to the UK, though this government is particularly bad. How do you deal with that?
So, Isabel, before Mark comes back, because each of these things are going to be huge, I know, but I want to come to Finley Asher, because Finley, you were making a point about being an engineer, and I imagine as an engineer, you're in favour of innovation helping us get out of here, but it seems that you're sceptical about the extent to which engineering can help.
Yeah, and just for Mark's context, I work in the aviation industry, but I think some of the things that he mentioned in the Reef lectures, which I thought were really good, and it's similar with the Bill Gates book. There's a lot of discussion around these techno solutions, biofuels, hydrogen, carbon capture and storage. And for me, we do need those technologies, but they're useless without actual regulation, in particular of demand for energy consumption. And fundamentally, we just need to use less energy. All the technology in the world won't help if we keep on increasing our energy consumption. And I think that there's a real issue with us focusing on technological solutions that I know just won't help us, in favor of actually doing the behavior change and the government policies and regulations to make the behavior changes happen. So I'd like to hear your views on that.
Finley, thank you very much. And Joe Mortensen, I think you were asking if I read it right. I just got a message saying Joe's rather would like just me to sort of put the point to you, Mark. So I will, which is there's some people who say, look, you kind of want to have your cake and eat it here. I know that phrase has been overused in the British context in the last few years, but the point, Mark, is at some point, people in positions of influence and authority like you actually have to tell people you can't keep consuming as much as you are. That there's a fundamental change in individual behaviours that's needed. And I wonder how you'd address that consumer point.
Great questions. So I'll go in order. Try and go in order. Start with Isabel's. And absolutely right. I mean, there's a political tragedy of the horizon, and I do try to say that the issue of climate is that that it goes beyond the horizon of central banks kind of think a few years out. Politicians think the electoral cycle. Let's say it's 4 or 5 years. Some businesses think the business cycle, which is stretches to 7 or 10 years at that level. But the real crunch comes beyond that, and what can we do to pull it forward? And secondly, absolutely agree. 2050, that's nice, and that's the world's objective. But it's unable to judge. So how do you pull it forward so that we can judge governments and hold them to account? There's a couple mechanisms. One is, like anything, if you need near-term milestones, and candidly, to build credibility, you need near-term milestones that are consistent with it, and then you need to outperform those. So, I mean, given some of the fluctuations, it's not quite like a deficit that you can largely control through tax and spend measures. But 5 years is about as far as you should stretch on your near-term milestones for these, and then mark your homework. The second thing in marking your homework, someone else should mark your homework. And I do think, and I should have double checked that. I always get the name slightly wrong. the Carbon Transition Council in effect, but there is an independent body in the UK which judges the carbon plans, as I suspect you know, and does a gap analysis of how far they fall short. And I'm certain that they haven't analyzed yet the 10-point plan. It's not the Carbon Disclosure Project, but that's a good guess. That they do lots of good stuff, but there's Adair Turner used to head it, and it's this transition council, which they haven't assessed the Prime Minister's 10-point plan, but I'm pretty sure that the existing measures plus the 10-point plan does not get the UK to 68% down by 2030, and it's probably a 40 to 50% gap in terms of where we get to relative to that. And having that exposed and clear and understood, and of course there will be other 10-point plans, there'll be other measures, there's more to come, but that's what we need, and that combination plus robust stakeholders is really the only way I can think of to overcome it. In terms of Ashley's point, which I will simplify, which is not over reliant on technological solutions. Yes, that's absolutely right. I mean, the one, and this is not a get out with climate, you need everything. You need existing technologies, you need new technologies, you need energy efficiency, you need demand management, you need public sector, private sector, third sector. I mean, you do need everything, and it's always dangerous. And I don't want to give the impression that I fall into a camp of this is easy. If we just do three things, then it will happen. And I think, I mean, he can speak for himself, obviously, but probably there's been a bit of learning and a bit more learning for Bill Gates on that front, which is he goes to tech, that's his expertise, and we definitely need some of these technological solutions, but they don't solve the issue. And if we wait for them to be in place with the usual tech cycle, we will have blown through our carbon budget between now and then, and so we have to do everything we can. And demand and efficiency is very much there. I agree with you, Ashley. I think the other thing, which I didn't mention, which is demand, regulation that creates demand. So fuel blends, for example, for maritime and others for hydrogen, which helps to create some of the economies in scale and scope, just because you have to, the industry has to ramp up production of, in that case, ammonia, I guess. And that has a knock-on effect on electrolyzers and others. The cake and eat it question. I agree. I mean, I agree with that. I think the question is, there's a political question, or there's an effectiveness question around this, and I may be wrong about it. I start with, we need to do all these things. So there needs to be 3 trillion plus of investment in renewable energy every year for the next 3 decades. I mean, that's a big number, and it's about 1.5 trillion today. So it's basically a doubling. 1.5 trillion, not in renewables, but in power as a whole. So we need to double that, and we need to get on with that. And it's good to highlight that. There's things that Ashley was highlighting and other technology that needs to come into place. And we need a lot more money to go into these areas that have been neglected relative to, battery storage or solar. If you think about hydrogen, carbon capture, direct air capture, whether there will be biofuels and sustainable aviation fuel, we need a lot more money, a lot more focus on that. So it's good to shine a light on that. There does need to be efficiency. There will likely need to be, see me hedging even in this answer, there will need to be adjustments to diet and to lifestyle. Some of those lifestyle adjustments, by the way, are happening anyways, as the nature of the economy shifts more towards experiences as opposed to physical consumption, but not all of it. But yes, changes to agriculture, change to diet and others. And look, it's a question of whether you lead with that. Mm-hmm. Do you lead and say, okay, first thing I'd like to do is tell everyone you can't eat beef. Because by 2050 we can't eat beef, or words to that effect. And so I'm going directly to somebody's, not everybody's, but to a number of people's identity, the way they live. I'm going to a big constituency in terms of, and when all these other things have to happen as well in order to get there. And my judgment is that's just leading with that is
So you're saying, but just let me read that right, Mark. You're saying those things are going to have to happen. It's not that
I think so, yeah.
These changes, but you shouldn't just be. You're not going to start by taking away the.
Wouldn't start on that, or you were, and I'm saying that in the context of a world that ultimately, lifestyles and diets, rise to a similar level over the course of the next 3-4 decades. I mean, which they should in inclusive growth. And if that's the case, and meat consumption goes up to Western levels, then it is a huge burden on the planet. Which there's a limit to regenerative agriculture and carbon capture and sinks that can offset it. So it can't go to that. But you never know. But I just wouldn't. I mean, as you can tell, I wouldn't start with that because it's a frontal. Lots else needs to happen, and it's a frontal assault, including on identity. And
can I move to a different element of values and an issue you touched on earlier about the society we live in? And the link is this. One of the things that's really striking about where you ended up as your time as governor of the Bank of England was that you were talking about using the powers of the bank to try and transform social outcomes around climate, and that this task force on climate-related financial disclosures was more than just a measuring exercise. It was going to be an exercise that would change behaviors across business, across finance, but across business. It's very, very far from the mandate of the Bank of England, which is around inflation and the stability and reliability of our financial system and our monetary system. And the reason I wanted to ask you that, Mark, or point to that, is that some people have said, in the light of the inequalities that have been exposed by COVID and the inequalities that have been exacerbated in the decade since the financial crisis, that one of the problems with central banks is that their mandate is just too narrow. In the end, they're kind of on the job for inflation, but they're not really caring about the broader impacts on society. And here you are, you've written a book about a set of values, but one of the most important values that the market is failing to deliver is an equality of opportunity and equality of outcomes for people. And I wonder whether you regret now or rethink now what the mandate of the Bank of England, what the job of the governor of the Bank of England should be?
Not necessarily. I mean, in terms of the Bank of England, not really, to be honest, for a couple of reasons. One is there are limits to what central banks and or the financial sector in isolation can do, which is why you need this combination of policy and preference, if I can put it that way. So social preferences that then accelerate and direct the financial sector, as opposed to a central bank directing the financial sector for a broader social end. That's the first point. The second is actually the responsibilities of the Bank of England are very broad, and they include, as you referenced, financial stability, which is one of the reasons why climate, in our judgment, was and still is relevant. It's the judgment of the current governor as well, because we're setting ourselves up for a big financial stability problem. And at a minimum, the system needs to be aware of that and start to adjust today to the extent it can. Ultimately, finance or central banks in and of themselves are not going to solve climate change. I mean, I'd be under no illusions on that. And governments or others, and I'm not saying you're trying to do it, but if you outsource that to central banks, you're basically washing your hands of the problem, and we're going to end up with a problem.
No, I understand.
Conversely, I think that one other point I was going to make, though, just in terms of central banks, which is interesting in terms of the Fed, within its remit, within its mandate, it's saying that, to grossly simplify on central banking and inflation, you get inflation or unemployment down to the so-called natural rate, which would be around 4%, let's say, in the United States. And then inflationary pressures are going to pick up. That would be the normal judgment. The Fed is explicitly saying that's no longer the case in the US, because we're going to look at the unemployment rate or participation rate of of African Americans, of other racialized groups, because we find that if we can run the economy a bit hot, actually more of them start to come into the job market, which is obviously a social good, but actually it turns out to help with our inflation mandate, because we can have more people working, and inflation more or less under control, which is a pretty radical change.
Yeah.
It's a change, and will be tested going forward.
And Mark, just
and the last point in which Katerina just flagged, sorry, I was going to make this, but to put it, which is the government has said now in the last budget to the Bank of England, this is something I advocated, but you have to take climate change into account as you conduct your monetary policy. And so as well as when you oversee banks and insurance companies. And what that's going to do is it's going to mean the Bank of England, when it won't necessarily change the level of interest rates, but it'll change how they're achieved and what kind of assets the bank will buy. And it will buy assets that are part of the solution and not buy ones that are part of the problem. I mean, to grossly simplify.
You know, and Mark, I appreciate what you're saying. I also appreciate you flagging up the US case. I saw that Daniel Goodman in the chat did the same. You know, something very profound, or potentially very profound, is happening here in that I appreciate, you know, we want our elected politicians to be making big decisions on policy and the nature of the society we live in, but we've also got to respect that central bank governors are powerful. And we've seen in the last decade, not just in the financial crisis, but in the low interest rate environment, quite how powerful central bankers are. And I suppose I just want to press you a little. We are seeing an extension of the mandate of the Bank of England vis-a-vis climate. You are seeing the Fed in the US trying to address issues of racial justice. I just wondered now, if you were sitting there trying to frame how the central bank can at the very least be seen to be making decisions on financial stability and monetary policy, but also keeping in mind the issues that run through the book about you know, relative equality of outcomes, absolute equality of opportunity, intergenerational equity, the things that are at the heart of the book. How do you build that into what a central bank does?
I think it's a great way to frame it, and those are the pillars. Part of it is in understanding the impact of your policies, and that's partly through statistics, but it's also actually, you know, getting out there and going around the country and meeting people who are not in the, I mean, the shorthand is you see most clearly when you see from the periphery. So you understand the economy from the perspective of the unemployed or disadvantaged regions better than you understand it sitting in the center of prosperous London. Part of it is on equality of opportunity. I mean, so we did a couple of things on that, and I think this is more than trivial. We quadrupled the number of universities from which we recruit, from 10 to 40. We cut the proportion of economics and finance graduates, we capped that at 50%, because that meant, I mean, it's still the case, it's changing a bit, but economics and finance is largely people who look like me. And so you end up in this, you know, reinforcing circle, which is, oh, we can't get diversity because they don't take economic and finance degrees. But there's all these brilliant people who take, you know, the humanities, sciences, etc. And it's not, I can admit this now that I'm not there, it's not that hard to train them up into being, you know, you bring them in to be economists, and then it's through experience. So that grants to diversity. But the other thing we did, and we are doing, is we created a module, a decision module, an economic decision module for the state schools in the UK, which within 18 months hit 20% of kids from 11 to 16. And we sent out 500 people from the bank to go to various schools and help teach the module. And the whole point was, I mean, obviously partly educational, but just a signaling device, which is there are careers in London. This, you know, these individuals aren't, you know, you could work for the Bank of England, you could work in finance. There's this whole world that's there, and these are some of the building blocks. And that's part of how you shift equality of opportunity, intergenerational equity. And of course, you know, the whole climate discussion is fundamentally an issue of intergenerational equity.
Forgive me for interrupting, Mike, but there's another element of intergenerational equity which is not on the climate crisis, but is around COVID. And I just wanted to bring in Rachel Melson, because she She asked a question about how, well, actually, I'll ask you, Rachel, why don't you put it to Mark, just about the generations.
Thank you, James. Mark, hi, I'm a doctor in elderly care, and I've also worked across the finance sector on a number of different issues. And currently, one of the things I'm most interested in is how we actually, and by shamelessly quoting your brief lectures, how do we return to the issue of the values that we hold as a society, and how we value or re-evaluate what value we put to those values. And I know there's an awful lot of value in that.
Yeah.
But what I'm trying to say is we have families, we have societies, we have intergenerational needs, we have care needs, we have housing needs. All of these things apply to older generations as well as younger generations. And recently in a conversation, I heard that only 22% of the finance sector are over 50. And I do wonder, you know, if you actually had to pick up one thing, what is it that you could offer up as an action that asset owners and asset managers could implement from a finance sector perspective to change that dynamic, to actually refocus us on the values we have and how we exploit those for the older generations?
It's interesting. One thing for the older generations.
And I mean, everyone over 60, I count as an older generation person.
Yeah, it's interesting, Rachel. I think, you know, it's been pretty, the system has been pretty focused on that generation, candidly, over the last 25, 30 years. You know, and my intergenerational concern is more the next generation. So not mine, but because you know, the costs of the welfare system, you know, cascade onto the next generation. Obviously the climate crisis on the next generation, the deterioration in the social capital that was consumed during a period where that generation was divided. Again, the next generation, you know, not me, but others have to build that back up. The deterioration in public education, again, happened, you know, so there's a number of things that were consumed over that period, arguably. Look, it's been a difficult period, but, you know, who's borne the brunt of this crisis, you know, in terms of the, I don't want to say the spillover effects or the collateral damage, but it's been people in education, you know, actually being educated or not being educated, who are going to lose opportunity for jobs coming out of the gate, and who ultimately will be paying off the debt. Necessary debt, but will be paying off.
I think the point I'm trying to make is, how do we build back better so that the situation we currently have, which is not optimal for older generations, despite the fact that they have utilized all of those resources, how do we make sure that doesn't happen for the next generation?
Yeah. Well, okay, so maybe I misunderstood the question. I think we. So, and let me just introduce yet at this late hour, you know, another element to this, which is the big technological change that's, you know, the other big rewiring, which I know, James, you and Tortoise have thought a lot about and had these discussions, but that is cascading through and has been accelerated as a consequence of the past year. And we are now coming off, we in the UK, coming off what is 13 years where the average real income is lower than it was pre-financial crisis. We're back in that hit. And so I think first we set an objective that, you know, real incomes are going to grow, that they're going to grow across all strata of society, that as we have a more, you know, there's an opportunity for a more dispersed economy, in part because of mechanics like we're living through right here. But does everybody have, you know, do they truly have universal broadband in a level that's needed? Do they have the education that's there? Or the skills training that's there? Is the social welfare system integrated in a way? I mean, the book argues for a number of these changes in the core institutions on the scale of changes that happened in the wake of the first, second, and third industrial revolution. So I think it is quite broad. You asked for one thing. I'm not sure there is one thing, but I think the one value I would emphasize coming out of this, out of my 7, well, I'm going to cheat and emphasize 2, but one of them is at the core is solidarity, which was the best of the response to COVID. You know, everybody the extent to which people acted as they were in it together, including with people that they didn't know, and the solidarity of bringing as much as possible everyone forward, and then the consequence that spills over into how you design the tax system. I mean, we're still advantaging capital wildly over labor in the tax system and over skills training. And it just actually was reinforced in the last budget. It goes to the nature, as I say, the nature of training. It goes to the nature of digital opportunity. I said I'd emphasize too, the one thing, lest, and James alluded to this at the start, the ambition of the book. The last value in the end of the book is about humility and the importance of humility. There's lots of applications of that. I just say that one has to have a combination of ambition and humility around these issues. So your challenge, Rachel, is the right one. Make an objective that is as clear as net zero in terms of the incomes and the employment of the next generation across the country. And then, and it's not immediately, all the answers to that, just like to the climate challenge, are not immediately obvious, but then it leads to a series of things, and I suggest several in the book, but it will lead to more to that same objective if we have agreed in a sense of solidarity. And I'll hand back to you, James, that is what we want to accomplish.
I just wanted to pick up on a couple of other things, Mark, that are in the book that are separate from the conversation we've had. One is, there have been a few points in the chat around Bitcoin, and I did, as I read the book, think to myself, there would have been a moment, certainly in the history of the Bank of England, if the new governor had breezed in and said, look, I'm going to communicate more directly to you, the people of the UK, by Bitcoin. And I was trying to imagine what that would have done for the people of the UK, given what happened over the course of your time. But when you get to the section in the book around the future of money, the thing that's really striking is actually you come out as quite anti-cryptocurrency, not a believer in its long-term prospects, not even in stablecoin, but you are quite an advocate of a central bank digital currency. You do seem to think that's a runner. So can you just explain what that means and why you're not a believer in the long-term outlook for things like Bitcoin?
Yeah. So there, if you read the book, and I hope you have a chance at least to skim through it, if not read it, there are a couple of chapters about money, because the logic is that, well, if we're drifting to a world where the price of everything is the value of everything, well, what determines the price of everything? What's the unit of that? And that's money. And what determines money's value, and why it goes through the history of money and the future of money, as James just alluded to, is this is also a question of values. There are periods of monetary innovation, but ultimately most of them fail because they're not transparent. They don't have a fundamental resiliency. They demand, as the gold standard demanded, huge adjustments within the economy, and they're just not a social consensus around money, because ultimately money is a social convention. And I think with all the innovation around Bitcoin and cryptocurrencies, they fail the tests of money in terms of their usefulness. They also fail the environmental tests of money by, a shocking order of magnitude. But they also set themselves up ultimately for failure and runs. And, there is a very long history of it. And you can see, including with what are called stable coins, that the only way to really make them stable is to staple them, and I'm paraphrasing, but staple them to the central bank's balance sheet, which is your balance sheet, right? It's the people's balance sheet. And if you're going to do that, it should be the people's money. It should be the sovereign money. It should be a central bank digital currency. And you can do that in a way, so we can do it in a way that then increases competition and choice in the financial sector, which is obviously a good thing. And then it leads on, and I referenced this a bit and over the weekend in the Financial Times, it can lead on to a form of trade and for smaller businesses, both within the country, but globally, that's much more efficient and actually is part of the leveling up agenda.
But what does it tell us, Mark, about the weird world we're in now, where the People's Republic of China, run by the Communist Party, has a central bank that is introducing a digital currency, central bank backed, and the UK, the Bank of England, the European Central Bank, the US Fed have not yet got round to that.
It tells us the Chinese move fast, and they're not just, they're introducing this, they're trialing it in something like 70 municipalities that total up to 200 million people, and making progress. The better news is that just as I was leaving, we set up a working group with the ECB, the Bank of England, the Bank of Canada, the Swedes, and the Swiss, to do just this with our own currencies. The Fed is now joined. There actually is a lot of momentum. And I think what we'll find is that we will do this over the course of the next few years. I'm certainly advocating for it. And we will do it in a way that doesn't then give the government direct line of sight to all of your transactions, which is exactly what's going to happen with the Chinese digital currency. So this is a values-based proposition as well, because we will design it in I'm sure, in a different way. And we will, and so there will be some catch up.
And can I ask you then, just as I see that sort of time's running out, I want to ask a couple of personal things, as in about people. People will have been well aware that, in a prior life, you worked for Goldman Sachs. And one of the questions here is about the character and the behavior of people at the top of the economy. In the book too, you raise questions about the people leading the global fossil fuel companies. You cite an example as regards Shell. What's going wrong there that the people who are leading these big companies are not leading by example?
I think what happens all too often is that they see first off, leading the company as being the apex of accomplishment, leadership as an end in itself, as opposed to a means to an end. And that the not viewing themselves either as custodians of their institution, or I should say, as part of a system. And the system, whether community, a financial system, and more broadly, and taking that sense of responsibility with them. That's when it goes wrong. I think we're at a period. I'm going to come off sounding, look, I think I lie awake at night and worry about the climate crisis. Don't think for a minute I think we're going to, that this is easy. But I think we're making traction and we can make real progress there. I am encouraged as well that there's more than talk around stakeholder capitalism or purpose-driven corporations. I'm using those as synonyms. What's essential for that, and the book goes into some of the things we can do from a regulatory perspective, hold back compensation, make senior managers responsible for their employees, whether they've been trained and properly developed to avoid problems there. There's things we can do. But in the end, what I'm saying as well, and I'm explicit in the book, that you can't legislate virtue. That above and beyond these measures, there is a cultural aspect and a level of expectation. And after all, what this starts with, and somebody kindly mentioned the Reith lectures before, I think it was Rachel, for Adam Smith, in the end, moral sentiments are modes of behavior. Those social memes, they're expectations that we develop of each other. And is it okay to be a CEO, who just thinks about either their compensation or their company, divorced from the rest of society? And I think that is shifting, but it needs to be what I'm obviously trying to do is reinforce it. And if you read any of the book, I would read the first and the last chapter, which tries to draw that point together to bring grappa into wine, if you want.
And Mark, I'm going to ask you one final question. I realize we're right up against time, but if I may, I'm just going to ask you one final thing, which is that I remember hearing you deliver that Reith lecture, and I had the same feeling as I was reading the book, which is, this is an amazing thing for a governor of the Bank of England, or now a former governor of the Bank of England, to really be questioning in quite such a profound way the problems with markets. And I wondered the extent to which you felt that in the course of the last decade, seeing what you had, particularly around COVID, the financial crisis and climate, that you personally had changed, that your outlook on life had changed.
I think that, yeah, at a minimum, it evolved. Shall we put it that way? Where certain things were reinforced. I'm probably, and I'd also say as well that maybe to my detriment, that my thinking on these issues are clearer now that I've been able to step back and assess all that I was through and what others had lived through and data around it. Look, I still, I do believe in the strength of markets and the importance of them, but as part of an ecosystem, as the alcohol in the wine, if you will, to go back to the example at the start. And yeah, now all I can do is write that down and fortunately abuse your hospitality by making the arguments and then leave it to others to put it into action.
Well, you've done nothing but kind. It's been really a pleasure, Mark, to listen to you. I just wanted to say, I think for a lot of us, the chance to hear you in the Reith lectures, to read the book, but just get the chance to hear how your thinking's evolved and hear it directly from you has been a real pleasure. A big thank you to everyone who's joined us. I know that I've got to a tiny fraction of the people who wanted to put points to you, but I hope that the exchange has been worthwhile and interesting for you and interesting for everyone who's joined. Have a good afternoon in Ottawa, and for everyone everywhere else in the world, whether here or elsewhere, have a good rest of the day. Thanks so much.
Thank you very much. Thank you, everyone.